This is our Forex blog for November 20th, 2012. And like we do most days, we use the currency meter to identify which individual currencies are strong, which ones are weak. The euro's on top, so you would, if like today it was strong, buy it against whatever's weaker between the dollar and the yen. The yen's weaker, so you're looking for buys in the euro yen. The Swiss is pegged to the euro. It was a little bit less statistically strong than the euro, but you would also buy the Swiss yen. Same thing with the CAD and the pound. These are the ones you want to buy. The Australian, you can see, was weak. You don't want to trade a weak one versus a weak one. You could also have bought the euro against the Australian. Now this is not a pair I typically leave running, but let's just take a look at that one. And then we'll go over the other ones. You can see this just continued to trend. So when one currency is strong and the other one's weak, there's really two main ways that we look to get into these trends. One is a pullback, and typically it's 10 to 20 pips minimum that you want to wait for a price to pull back and go against the trend, and then you look to buy it. Super strong currencies like this oftentimes don't even give you that kind of pullback. You know, sometimes you get a little pullback and then it goes sideways. When it breaks out, you get in. And you can use trailing stops, chandelier, parabolic stop, or fib targets to get out. Notice how it hit that level. And then hit that level, major resistance at those areas. And typically trends will move 3 to 5 waves your direction. So here's one wave up, pullback. Really this big long move here is the second pullback, and then this is the third. And notice when it pulled back and tried to go up, couldn't break that high. Sometimes you get moves that go 4 waves and 5 waves, but typically 3 waves is the normal trend. And once it moves 3 waves, you can really start to look to do counter trend trades at the next fib target. Now, it never got there today, but after a currency's moved 3 waves your way, you start selling the 4th and 5th wave. You might lose money on the 4th one, but typically the 5th one you'll get a 20 to 50 pip counter trend move if you have the patience to hold for however long it takes to pull back. Now, let's take a look at the euro yen. This was one of the better trades today. And our FX trade signals put circles on the chart that are counter trend signals. Triangles are trend trades, which are based on pullbacks and also support resistance. Our value areas are very key support resistance. You can see this one here found support, went up. This point of control, the most actively traded price of yesterday, after a certain bar pattern pullback, it gave a buy signal. You can see price went up 40 pips, came down and hit this area again, found support and went up. And whether you use our signals or you do your own, you can, count the number of bars above or below a very fast digital signal processing based moving average. I like a 5-bar, 2 period, shifted 2 bars to the right, and you click DSP, and typically anywhere from 3 to 10 bar pullback underneath this. So you identify a trend up, you count the bars, 1, 2, 3, 4, 5, 6. This is the first green bar after a 6-bar pullback. And then you just simply buy when it goes 1 pip over that bar's high, or if you really want to wait and avoid a few unnecessary losses, sometimes you pay a pip or 2 worse price for your entry. You wait for it to break through the displaced moving average, and in this case you would be long here at 98, and you can use it as an exit too if you want. You would have got out of this with about 18 pips. Now remember, you want at least 5 or 6 bars underneath the moving average. So, and it can be from the very start of it. So this would be 1 bar, this bar went back above it, 2 bars, 3, 4, 5, 6, 7 bars, wait for it to go back up, and you catch this next move. By counting, minimum 4, I like 6 to 10, and the farther up it goes, the more I'm going to wait for a 10-bar pullback. So this would be 1 bar right here, 2, 3, 4, 5, this one's above it, 6, 7, 8, 9, 10. And a lot of our systems count the number of bars underneath this, and it basically makes sure that there's enough of a pullback that you don't get stuck. In this case, this was a particular signal right here, number 6 trend buy, that is a lower probability. It was a very strong currency. The daily, weekly, monthly trend are all up, and so it put the signal on the chart based on a 2-bar down, 1 up, 2 down. This one really didn't come down enough to signal a buy. I like to see bars that are more stretched out. A lot of these signals I go over each day, there's about 50 different patterns that are in there. And I catch a signal like this, I put in additional code so that trades that I really wouldn't have taken myself don't show up in future days. But I haven't done that today yet. So number 6 trade will be gone when I go through this and put in extra rules to make sure it pulls back a certain number of pips. I like 15 pip pullbacks. Once the currency moves up, pretty much 1 wave, 2 waves, 3 waves, sideways, 4th wave. This was the 4th wave up, as you can see. Actually, there's the 1st wave pullback. This one you really could consider the 2nd wave because it kind of went up, down, up. It always has to make a higher high to be counted a new wave. So this doesn't get counted as a wave because it's not a higher high than this. It has to be significantly higher high, at least 10 pips. So this would be the 2nd wave, 3rd wave, and as you can see, this is actually the 4th wave. So I would have actually started looking for sells at this next wave. Enjoy your fibs off that last one. And that's why I like to get short at the 4th and 5th waves. And you can see, wait for the statistical momentum to run out. And a lot of times when it goes sideways like that and starts to pull back, usually you can get a 10-bar pullback. So you could have shorted this at 70, pulls back to 50, made 20 pips, flipped because it went down 10 bars, and wrote it back up and made 15 pips on the upside. So let's take a look at the pound yen. Very strong pound, not quite as strong as the euro. Let me bring this up here. And I do the Fibonacci analysis every night so you don't have to. A lot of times currencies, when they're stuck in between the value area high of the previous day and value area low, it really has to break out of that range. It's very likely to be choppy anytime that value area high and low is in such a tight 20, 25, sometimes 30 pip range. Once it broke out above the high here, that's a pretty decent trade. In this case, it only shot up about 10, 15 pips, pulled back, found support here. As soon as it started going up again, you get long. Oops. Try your fibs from the low to here, and you have your profits. Now, if it stalls the first fib target, I'm going to get out of half, or then use the trailing stop on the other half. If it goes to the 1.618 fib target, typically most times I'm going to get out of the whole trade. You can see it didn't go more than a few pips above there. You would have been long somewhere around 46 to 50 and out at 89. I mean, what a phenomenal, almost 40 pip move there. And as you can see, once it moves up a lot, you really got to wait for a decent pullback. So we don't buy this little one or this one because they don't really pan out. Wait for a decent sized pullback, and that's why we use technology that actually looks to count the number of bars under that displaced moving average. Does it behind the scenes. It also uses our daily statistical high and low plus daily 1 standard deviation high and low, 4-hour, 1-hour high and statistical high and low plus the 1 standard deviation. And that's what a lot of these counter trend signals are. They're just possible early warning systems to let you know. And if it's at an upper containment band, typically 70% of the time or more, the white 2.0 containment band's the end of the move. And sometimes you get a move up to these that don't have this kind of strength, or maybe the real-time strength is strong, but the daily, weekly, and monthly trend is still down. Those are phenomenal trades. But you can use those as profit targets as well. If you bought this pullback and you see a counter trend signal right here, get out if it goes 1 pip underneath the low. And that's how you trade with our tools. It doesn't take a rocket scientist, and I'm trying to make it easier and easier. Some patterns, like this little breakout right here, then pullback, it's very hard to teach a computer that. A human being can spot a breakout from a very tight rectangle range because the horizontal lines on here let you really see this range is stuck between 2 major areas of support resistance, and once it breaks, it's very likely to go up. And anytime you see an explosive move up with a lot of momentum, the pullback with very little weakness, it's extremely likely to work. And you put our FX build a trend trailing stops on there, and it measures how strong the pound is versus all the rest and how weak the yen is, and it has a very tight stop, but it's designed to keep you into the trade if the momentum is there, and if it's not, to get you out without giving back too much profit. You can see that when trades don't pan out, you have very, very tiny 3 to 5, sometimes 6 to 8 pip losses, but it will still keep you into these big explosive moves just like this one. You can see it got chart right here, and the market's kind of chopping up there. Sometimes that's going to happen. It's unavoidable. The market at extreme highs and lows, or in the middle of a choppy range, tends to go up, down, undulates. It's an auction process, and anytime you see that, you can kind of draw your, you can always draw your trend lines on charts. If you want to wait for the trend line to get broken, it's a much safer time to start looking for sells. If it comes up to this area here and can't go above the high, or even if it does, you can start looking for counter trend. Small profit, 10 pip profit. If it goes up and tags this trend line now from the bottom, it's going to be likely to be the maximum high. Trend lines are phenomenal ways of trading, and if you use our momentum tools, you can know whether to take the trade or not. For instance, let me just put on the pound yen here. Let's put on a 30-minute chart. Now this one had rallied up, kind of went up again and went sideways from Sunday to today. Because of that, the trend lines aren't going to be quite as effective. However, you can see I like to have the trend lines kind of connect with as many dots as possible. I might move it underneath this area here versus the low down here. And if you right click on there and you duplicate a trend, a lot of times you can project that from a previous high or even this area right here, and it lets you know where the likely max high is. That's why it's kind of having trouble going through that today. In most days, this is a wonderful place to do a counter trend trade. Now, I don't like to do this on anything like this, which kind of went sideways. It's much more effective when the trend is just continuous, as you'll see from this down move here. Watch. You right click on it, duplicate, project it from the lows, and notice these points right here. Where did it find support? Right at that trend line, and bounce. A beautiful 50 pips up. And this is where you can start to scale in progressively to a nice little counter trend trade, and especially any kind of day where it moves more than what a normal day's volatility is. If you put our range projection with 1440 minutes, it will show you the daily high and low, and you can put 1 or 2 standard deviations on there to find just absolutely amazing counter trend trades like this. And a lot of times during the US session, the market's already moved too much to continue trading with the trend, and you need to know low risk, high probability, high pip win systems when they're right, low tiny loss, losses when you're wrong. And that's the secret to trading: small losses, big wins. And anytime you combine trend line approach with Fibonacci analysis, draw your fibs off this last move, guess what? It's a 1.618 fib, almost to the pip. It's a trend line, projected trend line off the high from the lows. Phenomenal counter trend move. And when you use that with our real-time tools, if it comes down there and you see a little double bottom where maybe it was weak the first time and the second time it's not quite as weak, it's underneath the 80 level, it's much safer to buy the lows. And the same exact thing at the highs. When it came up, pulled back, came up, pulled back, came up again, notice strength, less strength, even less strength, and guess what? Pull back 15 pips. So that's the exact same approach that you can use to do counter trend with the highest amount of safety you possibly can have. Look, counter trend trades are going to be lower winning percentage than some of our trend systems. However, when the market's up, 150 pips, and it's statistically way too much, a lot of times it'll pull back 20 to 40 pips. So it's worth risking 6 to 8 pips to make 30 or 40 if you're right.